Sorry, guys. I hope you can hear me now. Yeah, that sounds better. All right. All right. Sorry. Okay, so we talked about just now the S&P yesterday. Very disappointing trade action on the day. You can see just by the intraday graph there that there was very little bounce in the market intraday basis. So there's very little buying demand if you're never able to even get a real significant day cap bounce intraday on a move like that. And so very disappointing, obviously, down every sector across the board. Obviously, the beginning of the day was led lower by ISM manufacturing numbers, which were very poor, came in at eight-month low. The thing is, I don't really think that the market was driven at all by that, simply because everyone knows how bad the weather was in the month of December and or in the month of January. So I don't think that that's really what. I really don't think that that's what led the sell-off. You could see certain things were already starting to unravel prior to that number. You could see the risk-off in trades like the yen. You could see some risk coming out in the commodity markets. You could see some risk coming out in the Aussie dollar. All of those, all of those trades were starting to unravel, as well as the emerging market currency starting to go offered again. So. All of that's just exacerbating worries that are already there. Think about emerging markets and those kind of things. All right, if you look in Asia, I think we still have one or two of the markets in Asia that are closed on the day, but you can see there Japan absolutely got decimated. We're down over 4% as we speak right now in Japan. Nikkei wiped. The Shanghai obviously heavy. Sorry, I think Shanghai is the one that's still closed. Hang Seng reopening, getting hammered. And so just a very negative day across the board. We've got the economic minister in Japan, expressing worries about the extent of the recent strength in the yen, but he's not going to be able to do anything to head off the tidal wave of the people that are getting stopped out of the yen short at the moment. So this is, like we talked about the other day, this is what we're going to want to watch for the risk barometer. I think that risk barometer is back. I think the RoRo trade is back, the risk on, risk off trade, and I think you can see it in the Japanese yen, you can see it in the Aussie dollar, you can see it in some of the commodities markets, you can see it in the the emerging markets and the emerging market currencies. So pay attention accordingly. All right, in the States today, we have a couple pieces of data out. We've got Emerson Electronic and we've got Gilead Sciences, so nothing really significant there. More data out today, though. We've got the monetary base out in Japan. We've got the unemployment numbers in Spain. We've got PMI construction numbers in the UK. We got local business confidence at 11:30. We've got PPI year-on-year numbers across the Eurozone. I think that's going to be the one to watch early today, as well as the CPI numbers in Italy. And then we've got ISM numbers out in the States today, factory orders in the States later, and the economic optimism numbers as well in the States. So those will all obviously be driving factors for our market going into the day. All right, let's get into the maps real quick. Okay, the one thing that I wanted to kind of talk about going into the day is the real sea change that we've seen. And we talked about this starting to happen about I guess maybe a week and a half ago. And we talked about the way we started to see some certain things in the sectors in the market starting to change and unravel and maybe going a little bit risk off. I think if you're not convinced that this is more than just a correction that's happening right now, then you're not paying attention. Simply because how dramatic the moves. We've gotten volatility back. What we're seeing right now is probably more than just a correction, simply because we're seeing this is a bigger story than that. We're seeing an emerging market story come up, and central banks are coming in to defend their currencies, and it's all happening because the Fed's starting to taper down on something that was a secular move in markets over 4 or 5 years. I mean, we're not talking about an unwind of something that's happened overnight. We're talking about an unwind of something that's built over the last 5 or 6 years. This is a major deal, and I think that it may be around for a little while because of that. So just keep that in mind. If we look here, this is the chart on the dollar yen. You can see here the correction that we've had there. Remember, we know everyone is positioned short yen. Look what happens here, and you get this reversal. We've done 400 plus basis points off the top from up at 105. I think we're going to be looking to come down to around 99.50 at least for some sort of support. Also, the 200-day is right around 100. So I think at the very least we're going to see some sort of a retest of that on the U.S. dollar yen, which, like we've talked about the last few weeks, is definitely back as a risk barometer. If you're not watching it, watch it all day, every day. It is now a leading indicator for us. The next one that I'll have a look at is the Aussie dollar, which had a huge spike up last night. I'm actually not sure. I haven't gone through stuff since I looked at the charts earlier this morning, but the left rate's unchanged. Yeah, sorry. So I didn't see that earlier because I was going through all these maps last night, and obviously we got a big spike up into that. On the back of them leaving rates unchanged. Obviously, some people maybe thought that they would cut, potentially, but bottom line is here we're dropping out of a huge pattern here. Today's session's not finished. I highly suspect that we'll probably drop back below this sort of level here where we've broke down from about 88.5, and the bottom line is these patterns, what we're seeing in the Aussie dollar continuing to drop levels, the Japanese yen starting to strengthen again on the back of guys going risk off. These are all trades that are shouting at us at where the market's going. And if you're not following these things on a daily basis, if you're not following them as a leading indicator, then you're not paying attention, and you're giving yourself a higher probability of getting hurt in the market, because they actually are giving us some reasonable guidance at the moment. All right. Next one we're going to look at as well, leading, another major indicator here for us, the FTSE. Let's have a look at the FTSE coming off of, the lows down here of a year, almost 2 years ago. You can see there, nice trend line set up. We dropped that yesterday. Obviously, that'll further drop this morning. So we're breaking major support here when we're looking like we were breaking out to the upside of the FTSE. All of a sudden, next thing you know, we're breaking down out of the FTSE, and I think this is just really important. We are seeing some sort of a sea change here in the market. Just keep it in mind. When we get these big unwinds in the markets, that can last for a long time. Be careful out there. All right, so next one I'll have a look at here, one of the local things. So let's just get into a couple of local stocks now that we kind of finished up with some of the the big leading indicators. I didn't even show the U.S. bond market. Maybe I should show that real quick. That says it all right there. I mean, we've gone from kind of a fake breakout above 3% on terms of the yields all the way down to almost 2.5%. I mean, that's an incredible move, and we've done it, and we've done the bulk of it in the last 2 weeks since we started to see this emerging market unwind. This has come at a time when we were supposed to see the bond market really starting to push higher in terms of the 10-year yield. So keep that in mind. I think this is an incredible thing here. Those are the leading indicators we're going to want to watch. The U.S. bond market, the Japanese yen, the Aussie dollar, some of the emerging market currencies. That's what we're going to want to watch to tell us what's going to happen going forward. Okay, enough of that. Let's look at Foschini here. Actually, look at a 2-year because it's just a little easy to see. Yeah, I mean, obviously you can see here we kind of dropping out of the bottom potentially of into new lows. If we to shorten this up and we just take this simply as a continuation pattern in the later part here, I just want to delete you. Okay, there we go. All right, and we're just to take it simply as a continuation pattern, dropping about 90.5 would take us on a continuation pattern down to close to about 82 Rand on a move very quickly. So, I think some of these things, guys, remember a lot of guys are long these things. A lot of guys are kind of waiting for an announcement to come on their financing unit being sold off. People are sitting there waiting for these kind of things to happen. They got long positions on in these stocks. This thing drops here. Look out below. It can move down rather quickly. Murray and Roberts as well. Murray and Roberts just happened to look at this one by chance this morning, and really you know, it's kind of hard to draw a real definitive line here. Either way, we definitely have some sort of a head and shoulder pattern. I'll maybe draw it from the closes on the neckline here, but bottom line is definitely looking very head and shoulderish on Murray and Roberts. And you can see we've dropped out the bottom here, but the target is significantly lower from here. I wouldn't be surprised to see us move down to the lows of the years, which are all the way down south of $22. So, watch Murray's. If you're playing in that space, it's starting to look a little bit ugly there on that chart, and act accordingly, as well as all the other interest rate sensitive stocks, obviously. All right, and then the last one I'm going to show is actually BHP Billiton. We can just have a look here. I'll shorten this up a little bit, but you can see here that we kind of continuing to push against some sort of trend support here. And this is making multiple tests. Sorry, I don't know why this big line is here, but we definitely coming down to test some sort of trend support. We're obviously probably going to drop out at the bottom of that a little bit tomorrow, this morning. Would expect to see us trade maybe down to the lows of the year, which are down around 16.5. So I wouldn't be surprised to see us dropping this morning, getting down to around 16.5 before we can find any sort of semblance of support here in Billiton's. I also think a lot of people have been rotating into this mining story in the last little while. We've seen copper down 10 days in a row now, and iron ore starting to get under pressure. People are starting to really swerve about the Chinese story, so there could be a total reversal in these mining stocks on a macro basis. Technically, they still look all right. This one's looking like it's starting to drop out the bottom in London, but on the macro side, I think the fundamentals are starting to look a little bit sketchy again. And that's it for today, guys. Thanks a lot.